You ever been in a position where you made a trade and afterwards you wondered why you did that after you kind of stepped back and took a look at it? And the thought process is typically that your location was terrible. Maybe it was FOMO. You had terrible risk on the table. And of course, you get stopped out. And you also might be in a situation where you took a trade and afterwards, maybe you made a little bit of money, but you didn't make much money. And after reflecting on that particular trade, you wonder why you took it at all. And lastly, you ever had those days that you were just felt like you were in the zone, that you're able to pull away from the market, see it clearly, make a good decision after another good decision after another good decision? Well, interestingly enough, I've been doing this for over 30 years, and I had a crazy idea I wanted to share with you because ultimately, what it turned into, an experiment turned into a thesis that actually had legs. And I think what I'm going to share with you today is actually going to make sense. You're going to have a big aha moment. And I want to walk you through a concept called brain state. And the experiment really kind of, in a way, I was working out one day, and like any other trader that does this, we eat, sleep, and breathe the markets. And my thought process was, why is it that some days I feel like I'm in the zone, and some days I'm just like everybody else, and I'm not making the greatest decisions, and maybe it's a couple losses in a row, and you know, uh, I approach the market, and I coach traders from an institutional level, institutional ideas, and it's big on understanding what risk is. We use a completely different format than, say, a regular retail trader when we're doing this, and we trade probabilities and great ideas with probabilities. But with that said, what I want to talk about is this experiment that I put myself through after almost 1,000 trades, hooking an EEG up. Basically, I started tracking my brain waves, and what I found was fascinating. So, we've all heard people talk about the market's a mirror. In essence, the market reflects the trader. Pardon me. It reflects urgency, it reflects fear, it reflects patience, it reflects clarity. The bottom line is the market doesn't change, the trader state does. So when I say state, I'm talking about brain state, right? Why we are in the zone and why we're not in the zone. So the real cause uh, of either a good trade or a bad trade, call it, execution is never independent of state, right? You have a brain state. We're able to track that. That state is what helps shape your perception of the markets. You are trading on a daily basis throughout the day your perception of the market. And that perception drives action. It's what causes you to hit the buy or sell button. I think as I get through this is going to make so much sense to you that you're going to realign how you approach the market and be able to cognitively realize where you are. You don't need an EEG, and you don't have to track brain state, because I'm going to walk you through what the big aha is. But trading mistakes are rarely technical. For the most part, if you've been trading even 6 months, you've got a pretty good technical hand on where support is, where resistance is, what a retracement looks like, what a stacking market, trending market looks like, right? But when we're not in the right brain state, you're going to have over trading. We can track hesitation. You're going to get out of your trades early. You're going to move your stops. You're going to have revenge trades. And these are not strategy failures. These are state failures. So there's 3 states I want to introduce to you. And again, you're not going to go out and get any sort of EEG level type of deal. If you wanted one, if you send me a message and this makes sense and you actually wanted to track it yourself, Muse actually has a gadget that you can do this with. I actually, if you contact me, hit me up, I will send you a link. You'll get 3 months free. The actual gadget cost, I think, a couple $100 if I remember correctly. But anyway, I did this in 2025. And what it ultimately does is what it told me was every trader operates in three brain states. There's a lot of different brain states you can track, but alpha, beta, and theta are what shape your interactions with the market. So what I'm saying is every decision is shaped by those three brain state interactions. So what is alpha? Alpha is your calm attention. You have emotional neutrality. You have a wide perception. You have pattern visibility when your alpha is steady and at its baseline. And again, when I did this, it was tracking baselines before I made a trade as I was entering into looking at the structure of the market, right? We want a wide perception. We don't want to be focused on, hey, I haven't made a trade in a while, I've got to make one, because the old rule is if you look hard enough, you'll find a trade. You may not like it, but you'll find one, right? Beta is the engagement and the action. It's where all of a sudden you get hyper focused, things speed up for you, and you go into execution mode. This is necessary in making a trade. Some traders have higher betas than other traders. They're more susceptible to taking action very quickly. They're quick with their fingers, right? Their trigger finger. If it's sustained, what we found is if beta is sustained, it is actually dangerous. And that's important to understand going into this. Theta is your recognition and insight. It's your aha, your I see it moments. It's your pattern recognition. It's where your experience-based intuition lives. The theta should appear and jump briefly, but it should not dominate, much like beta, right? We want that thing. That's your engagement. It's going to jump, but we don't want it to be sitting up there in a jumpy level too long. Where things get crazy, where there's a misalignment is when one state dominates, and that's where errors are going to appear. If you have too much beta, if it doesn't get a chance to relax, you're going to start forcing trades. If you have too little beta, right, what we found is there's hesitation. You start chasing the market. So if you have no theta, you're going to have late entries, meaning you're not going to see it on time. And by the time you do see that trade is long gone. Your risk is too high to take that trade, which is where most of the retail traders get stuck. They see a trade, they hesitate, they want confirmation. Retail traders are stuck on technical signals, whether it's an RSI or a stochastic or whatever that is. By the time that changes, institutions are probably those quick scalping desk traders are probably selling into you. An unstable alpha is emotional distortion, and that's not a good thing either. So let's talk about what we found when it came to entering the zone, and that's where we all want to be. If we're going to talk about what it is, we need to know what it's not, right? So the zone, being in the zone is not when you're excited. It's not when you feel like you're in a calm, meditative like state. It's not even when you just feel confident or when you're emotionally intensified, right? What we found are those are all distractions, right? Some people kind of feed on that. They look for calmness. They look for being confident in their bias, right? They get excited about a trade and immediately what do? You pull the trigger and you find out, oh God, I'm in the wrong location. I have too much risk. Here's my stop out. It was a pretty good idea, but this is actually where I should be getting in, not getting out. right? So we want to eliminate that emotional intensity aspect of those. Those are all distractions. What the zone is a temporary configuration. And when we looked at those charts, right, because, if you're a trader, you love charts, and I like data and charts. And what we found was you'll have a stable alpha. That is the baseline that is set. You have brief theta recognition. That's your I see a trade moment. And imagine on a chart, if we took out the highs and lows and just had an average price, and we had three lines on that chart. One was alpha, one was theta, and one was beta. If it was going sideways, alpha would be at the top, theta would be underneath it, and levels are important. When we did this is what we found, but I won't go into this because I've got a long teaching that I do with those professional traders or traders that are getting ready to be professionals. But so you have a stable alpha, a stable theta underneath, and underneath that you have beta. And this is where we are going to be preset in the zone, ready to see the markets. And so why most traders are going to fail to enter this is there's three common blocks that we found. One block is thinking that they're in it. The other one is confusion, you're confusing calm with readiness. And the other one is you just stayed engaged too long. That's that I'm searching for a trade moment. And here's the key: effort to enter the zone blocks access. And that's incredibly important to understand. All right. So the entry principle, you don't turn the zone on, you remove it. You remove what turns it off. And basically what we found is you have breath regulation, you have stillness, and a narrow focus. And we need to get rid of those things, right, in order to get into the zone. So those are the things that we have to turn off. And I would say it like this: entry is subtraction, if that makes sense. So the most dangerous moment is after the success. Its engagement feels productive, confidence rises, your attachment to your bias is solid. And this, unfortunately, what we found when we get into this position is theta and beta are over alpha. And when we sit there too long, decay begins. And let me just say this before I kind of go on, because I think for most of the traders out there, because we're aggressive people, boy or girl, I found that most traders, for the most part, have played sports somewhere in their life, and they get the competitive aspect of it. And so I'm really going to talk to those guys that were very competitive, that were good in sports, whether it was hockey, baseball, football, whatever that was. There was a moment in time, right, where you, maybe for your age group as an example, you were playing in an age division and a coach came up to you and said, look, you're doing really well, and we like to bring you up to the next age level and keep refining your success in this sport. And so they move you up into that next level. What used to be a better field vision, it was slower for you. All of a sudden, the game is faster, right? And so as the game gets faster, your perception of the game actually narrows for a brief time. You got to get used to the new speed, really. And so what's happening is you are putting yourself in a brain state that your beta and your theta are at a high level and your alpha is getting decreased, right? And so as that's happening, right, you're going through this period where your field of vision shrinks, you're forcing plays, maybe you pass too quickly, you go to the wrong area, you get back out of the wrong area and back into the right area. By the time you're in the right area of that field, the game is actually switched over to the other direction, and now you're kind of chasing, right? Does this sound like trading at all to anybody? And so what happens is over time, you end up relaxing. And so the game slows down, and now you can play at a higher level. If you went back down to the old level that you were at, it would be so slow and agonizing because you're moving at a faster pace that is now slower for you. I hope that makes sense, right? So when trades fail, errors increase when beta does not drop, is my point, right? Your beta stays up, you're still trading, but you're no longer seeing anything, right? Your perception starts to narrow, your risk tolerance shifts, and time basically distorts as you focus. Have you ever sat there and stared at a screen looking for a trade, and maybe it's 11 o'clock, and next thing you know, it's 2:30. You finally find a trade. It's the worst time to be putting on a trade because we're all getting out of trades, right? And now you're in the melee and you're getting stopped out. That's when your beta has been at a level too high, too long, and you haven't given yourself a chance to chill out. So let's talk about the recovery loop. Execution has got to follow a process, right? A trade completes, your engagement drops, and you want your perception to widen. And until we get that process completed, we don't enter another trade, right? So my tip for you, as this becomes an aha moment, right, is to complete a trade, whether you took full profit, maybe you got full profit and it continued on, or you got out too early, get in the habit, or maybe you just took a loss, right? We all take losses, right? It's just saying, hey, this trade is over, and I gotta go through a recovery loop to get myself back in, right or wrong. Let me get back into this game. It might be you walking away from the screen. It might just be saying, hey, the trade's over. I'm going to chill, get on your phone. This is a great time to journal. Think about what your emotions are. Get that written down, why you took the trade, why it worked out or didn't work out, and then relax for a minute. Get on the phone, call another trading buddy, call a friend, get on TikTok. I don't know, whatever it is, get away from the screen for at least a few minutes. So stopping early basically protects capital for tomorrow. I want to always tell you that as a professional trader, risk is always coming first, right? So if I continue to trade, if I keep pushing the envelope, I'm actually putting risk more and more on the table. So it might be multiple resets are required through, and I'm not talking about resets of your account. I'm talking about resets of the loop side of things, getting yourself. If you go through a process, and I'll teach you the process here in a second, and you don't feel like you've stepped back and your perception is widened, your field of vision is widened, you got to go back through it again, right? Otherwise, your alpha is never going to stabilize, and your compulsion to take a trade is going to remain there. So this is not a strategy per se as far as putting a trade together. This is simply a state-based system and understanding how your brain works and why you do what you do. It's really that simple. There are times where you make good trades and bad trades. And I'm trying to help you identify that it's all about your brain state and understanding how to get in the optimal zone and how to exercise through that process and then get back into the optimal zone. So it is the operating environment that allows strategies to work, is my main point I want to get across. If you're not in the right state, you are not going to make good decisions, and that's tough. Hopefully, as I'm walking you through this, you're starting to realize why days are good and why days are bad, and why certain time frames don't make any sense, why you lose money in certain time frames. For new traders, what I've found is that oftentimes the times that I don't want to have anything to do with are really good times for new traders. And there's a phase or a process, I should say a process that they go through to realize that the aspect of a bad time frame for me, where there's no direction, where the real money's not taking place, there's some structure there that they feel very comfortable with. And I digressed, and I'm sorry, but most people that are going to listen to this are guys that are really let's be honest, are trying to figure out this game and why they do what they do. So anyway, let's talk about phase one, pre-market readiness. Pre-market readiness is a process of calm breathing. A great way to breathe is to inhale through your nose for 4 seconds, exhale out your mouth for 6 seconds. You're getting the body still. You have no urgency. And at that point, you should have, coming into the market, right, one setup in mind. And I'd say it like this: no readiness, no trading. Phase two is what we call state confirmation. That is when your perception is clear. I've gone through phase one. I'm now reading the markets. I've got a clear perception. I've got my recognition is present. At that point, execution is allowed. So what I've done is I put my brain state in a place where I have the permission to proceed with action. Phase three is execution. Execution is brief. It's precise. It's completely detached. And what I'd say is we visit execution. We do not live there. Phase four is your exit and recovery. This is where we drop engagement. This is where we reset the perception and we protect the clarity. In essence, this is where we go through the closed loop of getting out of that trade completely, allowing ourselves to reanalyze the market, decide whether our original bias is on point or if the market is changing hands. A good example would be today is January 21st. Coming into the market, it looked like Asia was basically consolidating, and we had a little bit of manipulation with London. It was a bit of a push up to take Asia highs out, stop out those Asia sellers. Then they took it back down. We came in pre-market. It looked like New York was going to continue the move down for distribution. And all of a sudden, we had a pop. It was a complete reset this morning. They were stopping everybody out. Anybody that was short down in the hole, anybody that was using the London high as protection, this market took off. We got all the way back. When I say a reset today, if you go back and you look at the markets, what did we see in the NASDAQ, the S&Ps, whatever? We saw a major reset, meaning the market hasn't changed its bearish stance. If you were on a short time frame, it was extremely bullish. But where did we stop, right? If you look at the 4-hour and you study charts, I'm not going to go into what we teach our traders and we focus on, but there was a great risk reward area on the 4-hour that said, hey, look for this market to show us a sign to reverse. Now, why did I say that? Right? Came in with a bias, look for New York to distribute lower, got a pop into an area that was a high probability R trade for us, and got stopped out. And that happens, right? Limit the risk, got out, reset, realized that this market was taking off, trying to figure out what it was actually trying to accomplish. Was that the low for the day? Was this thing going to keep going? Well, we were super vertical. But then all of a sudden, we walked right into the trap. The 4-hour trap was laid. New York got it up there, and we waited for an opportunity, got our money back and then some, and got back on that short side. Why? Because we were able to go back through that the phases of putting a trade on, exiting, reevaluating, standing back, looking for something that would materialize that gave us an opportunity. Because I had, and the traders I work with, because we had a wide perception of what was happening, we were able to find that location, look for the market to show us the weakness, and jump on that particular trade. After that trade is over, right, now it's step back and go back through exit and recovery. Let's look at where this market is actually trying to go. And so this is a process you got to learn if you're going to be a professional trader and do this with any longevity. Phase 5 is post-session review, right? And this is where you want to journal your trades. Did I trade aligned? Did I recover cleanly? Did I stop on time? So this is, from a journaling perspective, I don't know if I want to share this, but I'll go ahead and share it with you. Most people try to journal why they took a trade, but they never get into the emotions aspect of what was happening when they took the trade. And what we've found over the years is that actually was more important to review your state than it was to review your P&L. And what retail traders, new traders coming in, it takes most traders, it'll take you a lifetime and maybe never discover it. It's not about P&L. It's not about the actual result. It's the process of getting to that result. And if you fix your state, right, if you review the state and you fix how your perception of the market is, maybe you're fighting and struggling with the market all the time as a new trader. Your perception of the market is not right. And you're worried about trying to fix P&L when really you need to fix your state. That's what I'm trying to get at. That's such a golden nugget for you that it's worth just sitting through this, I don't know what you want to call it, presentation or whatever. But here's the final truth, right? Fix the source and the symptoms resolve themselves. You'll have less overtrading. You'll have cleaner execution. You'll have fewer emotional mistakes. And it's not because you tried harder. It's because you governed yourself first. So I'll kind of wrap this up with why state awareness matters. Most traders don't know when they're aligned, when they're drifting, when they should stop trading. State awareness is going to replace guessing with recognition, right? So you need your brain state aligned. Alpha needs to be stable, calm, and clear. Beta needs to be low, needs to be quiet, non-urgent. Theta needs to be present but subtle. And this is readiness. This is permission to trade. This is not execution yet. It's just here we sit. And what's fascinating is that, again, as I said earlier, as I was looking at charts, right, and I was in a state of readiness, the minute I saw a trade, my theta jumped. It went straight to the top. That's a good sign, right? Trade recognition. As I located my best R to get into that trade, right? I'm setting it up with risk first. As I located the best R for that entry, now as the market comes to me, my beta jumps. So I've got a period in time where the beta and theta are above my alpha. As I execute that trade, immediately stops are set, targets are set. That trade is done, right? I'm not worried. I'm not worried about moving stops. I'm not worried about what the market is doing. This is how I presented that trade to myself. This is how I responded to that trade. And now I've got to let that beta and theta get back down and go through the process of those phases we just talked about. So again, I walked you through trade identification. It's your I see it moment. The execution is brief. It's over with when it's done. I've executed my trade. My stops are set. My target's set. I visited execution, but it is not my residence. So post-trade, again, I want a restabilization. And again, you're probably not going to go out and buy an EEG. Most of them are really expensive. I think it's called, anyway, I gave you the name of the product I was using when I was doing this. But needless to say, excitement, too little excitement, right? You're looking for that happy medium to get into the zone. When those things pop up and your field of vision narrows, you get excited, you get overconfident. Those are not good signs. New traders will think confidence to bias is a good sign. It's not. New traders will believe that being super calm is a good sign. That's not. You want kind of everything to line up, right? So again, warning signs: high beta before recognition, you're going to force trades. No theta is later mechanical trading. If your alpha collapses, right, too much beta, too much theta, you are going to collapse your alpha. You'll be in emotional distortion. So, and then sustained beta is going to put you into an overtrading format. Theta dominance, you're going to get into market imagination and overstructure. These are state problems. They're not strategy problems, right? So anyway, I just wanted to throw that out there. This has been longer than probably necessary. I didn't want to give too much information. There's a lot more to this, but I believe in helping people. And if you love this game, I think I really just gave you something to chew on. I'm not saying go respond to act on it right away, but take some time and think about what I just said, right? Get it into you, to your subconscious level. Think about those trades that you took. Maybe they were today, as an example. I would say most traders, including professional traders, took a pretty good whack this morning. Gave you an opportunity to get it back and get profitable, but this was probably a great day if you're trading to kind of go through those emotions aspects. I wish you all the luck. If this makes sense, if you want to learn more, I give a ton of stuff away for free on my website. So go check it out. It's at tradehivecommunity.com. That's not what this is really about. This is about giving you a nugget to chew on and maybe change your perception of the market and how you approach it. I hope this helps you. I appreciate it if you like it. You know, as they say in YouTube, give it a thumbs up, share it with a friend that trades. They'll get a lot out of it. I hope you got something out of it. As I said, there's a lot more to this, but I think that's pretty much the meat and potatoes for you, and something that you can actually use right away. All right, you guys have a great day. Go get them.